Good morning, Wall Street winners. It is Friday, April the 25th, and it appears that the optimism of Thursday and after market close in particular with great earnings from Google has faded a little bit in the aftermarket yesterday, as in the actual market during the day prior to close. All of the indices were in the green, finishing up the day. But they have now moved, and they moved higher into the green with Google's announcement and some of the other earnings coming through. But now they have turned to the red in the morning session. We're about an hour and 10 minutes, hour and 7 minutes from the open right now. And you can see all three indices there in the red. There's concern again right now around tariffs, specifically the negotiations with China. There's a lot of rhetoric right now out of the White House about China coming to the table, but China is continuing to say that they're not coming to the table. They haven't had discussions, so hard to believe which side is of that information is correct, or maybe it's somewhere in the middle. So hard to say, and investors still seeing a lot of uncertainty out there. Obviously, China, huge trading partner. Scott Bessent, the Treasury Secretary, yesterday delivering a speech and answering questions and basically saying that this is a huge opportunity for China to come to the table to kind of rework its economy to be less export-led, still export-led, but less so, and to build up a stronger internal or domestic economy within China. It's going to be a tough sell to get China to do that, and it's going to need multiple allies, which the U.S. have certainly alienated recently with their rhetoric from the president. So we'll have to see there. We also see tax talk around a new tax for millionaires. Trump says he loves it today, but whether he loves it tomorrow is something that remains to be seen. He obviously wants to push through his tax plan, and they're working on that in Congress and in the Senate, kind of behind the scenes. So we're really back to where we were at the beginning of the week, where we still have the U.S. Fed Chairman Jerome Powell in office. We still have tariffs pending. We have negotiation talks apparently ongoing. No deals have been struck, but everyone wants to make a deal. It sounds like a talk show. So it's really just, I think, a delay of the inevitable, which is that it's going to take countries a great deal of time to negotiate these tariffs. And if they can get done, whether they can get done within 90 days, will not only be one determining factor, but how this impacts the actual consumer sentiment and their feelings on the economy. If they don't feel like they should be spending and they should be saving some money for a rainy day or for the new tariff announcement come July around Independence Day, it's definitely going to send the U.S. economy likely into a recession, potentially into stagflation. I recorded a video about 2 weeks ago on the impact of stagflation on the U.S., and it is not a positive outcome by any means. We're already hearing from different sectors like airlines that demand is down, and they're cutting future forecasts for the year, so annual forecasts for 2025. We're hearing retailers like Costco and Walmart and others going to the White House, going to Washington to encourage the president to either rethink his tariff strategy or to understand the impact it's going to have. We're seeing grocery prices continue to increase. Egg prices may have come down, but they skyrocketed. Obviously, nothing to do with inflation, to do with tariffs there. So there's a lot of impact on just the threat of these things, and that uncertainty is rattling the markets a little bit. So we've got crude oil off about 80 cents today, almost $1. It's down under $62 a barrel. You've got the NASDAQ, which was in the green, dipped into the red. The VIX has popped up, but still fairly low in comparison to where I think it should be, below 27. I would think it'd be in the low 30s right now with everything going on. We just had a roller coaster ride this week based on really nothing, just speculation. And it's too bad, but it is an opportunity for trading volatility and profits. So hopefully you're playing the strategy that we've been advocating for here, I've been advocating for, which is on a positive day, towards the end of the day, the last 5 to 10 minutes of the market, buy a put near market close and 2 to 4 weeks out. And on a red day, buy a call option that is the same, near the market close of the index and 2 to 4 weeks out. That's been serving me pretty well in these volatile times. And then try to reduce your actual long-term holdings, because the fluctuation there can be pretty negative to the downside, and it risks a great deal of capital. So wait until we have some more certainty and clarity before you start putting money back into the market. I don't think it's a buy the dip moment at this point. If anything, after this week, where markets have recovered a little bit, not a fair bit, but a little bit, I think it's a bit of a nerve-wracking time, because we're just anticipating them going in the opposite direction. So if we scroll down through health and retail, HCA announced today some positive earnings and revenue growth, but I think a miss on cash flow. You can see they're up in the pre-market about $3.60. It's a bit of a mixed bag, mostly red on the screen for retail and healthcare. You've got transport, again, a sector I'm avoiding until we get more clarity on the tariffs, in the red for JB Hunt. We've got CNR announcing next week. We get down to oil, and oil is a bit of a gong show in utilities because of the price of oil, but also because of the earnings that we've seen. So Valero came in and missed pretty significantly yesterday. And then today we had SLB come in and they missed pretty significantly. So we're seeing a big decline in revenue from these companies and profitability, and that price of oil, the price of crude, is impacting their ability and interest to make capital expenditures and invest in their business going forward. So I'm not sure what happened to drill, baby, drill, but we haven't gotten to that part of the administration's focus. So maybe we'll see that as we move into the summer. But what we have seen is oil prices have dropped down to I'm not going to say record levels, but have definitely dropped down to probably 1 year lows. And that is something that the president wanted to see. So I'm not sure how that ties in to drilling in their own country and producing more oil, because it just doesn't make economic sense. We are getting some positive news on the NVIDIA side. So we are hearing that data center growth and the need for AI chips from NVIDIA, it continues to grow faster than demand can be met. So it surpasses demand. And that's a positive thing. I think we should see a pull forward or upwards of NVIDIA and NVDL. Texas Instruments had some great numbers. They do not make AI chips. They make, I'll call them the dumber chips, the older chips. And they said that their first quarter was great, but I think they're going to be significantly impacted in the second quarter by tariffs, if we do see some tariffs, and just by an economic slowdown. So I wouldn't be buying into Texas Instruments right now. We've got others here, mostly, I mean, it's a mix of green and red, but it's mostly red on the screen. If we scroll down and just look for anomalies, I think the big standout, couple of big standouts for me here this week are going to be obviously Meta, which is up, I think, based on the earnings from Google, and a bit of a pull forward there. So we'll see whether that pop sticks, with the NASDAQ now down about 51 points in the pre-market. Netflix is almost up at $1,100. This was a stock that was in the mid to high 900s a week ago, and then had some phenomenal earnings, and it has continued to rise. And then we have Google, and Google was up $7 or $8 in the post market yesterday, now just under $6. So it's getting a little bit of a lift, but not nearly as much as it had in the post market. And I think that's been true of earnings releases lately. Like Netflix was up a lot higher post market announcement on the Thursday going into the Good Friday, Easter, and Passover long weekend. But then on Monday at the open, it was not up nearly as much. And yesterday, after market hours, Google was up into the 170 range, maybe 171. And now it's in the 166, 167 range. So it appears that when we get a positive earnings announcement and it's after hours, maybe the strategy to maximize your profits is to sell it in the after hours when it peaks. So keep that in mind going forward with future earnings coming out. We've got a lot of tech earnings next week. The S&P 500, it was up. It's now down as we head into the market open in about an hour. We'll see whether that changes. And then finance stocks. They've had a great run this week, but most of them in the red, pulling back today. And this might be a good buying opportunity because these stocks with this volatility, if we have volatility for the quarter like we have this week, well, it'll be mind-numbing and nerve-wracking for a lot of people, but it will provide an immense amount of opportunity for the big banks with trading arms, and they should come out of this on the positive side. Unless they get stuck in a super over-leveraged position, but most of them have risk management that mitigates that. So you're the likes of Goldman, Morgan Stanley, JP Morgan, to just kind of blow it out of the water this quarter is highly likely with this kind of volatility. So good idea to keep an eye on these. And on days like today, when we see a pullback, maybe buy into those because I think they're in an environment where the tide is rising and all boats will be higher with that rise in tide. If we take a quick look at next week, just to give you some thoughts as to what to keep on your radar for next week. On Tuesday, we hear from Visa and SoFi. I really like SoFi. I think their earnings are going to be good. They announced before market Tuesday. That's one that I would be looking to buy into today or Monday and ride a bit of an uptick. You've got Meta. I think earnings will be good there, but they have had a bit of a run up now from the 480s up to the 550s going into earnings. So that might suppress the amount of lift they get even with good earnings. You've got Microsoft, which is definitely off its highs. I think they're going to have strong earnings. You've got Qualcomm. I'm less excited about Qualcomm because they do a lot with mobile phones, mobile devices, and I think that we've seen a slowdown in those, although for the quarter prior to tariffs, people wanting to buy new iPhones and iPads before prices increase with tariffs, maybe we'll see a bump in Qualcomm. I don't think it'll continue for the remainder of the year, but this could be the quarter to take some profits in Qualcomm. We've got Stanley Black & Decker. I can't imagine earnings are going to be good for them, but we'll have to wait and see. Dana Corp, I don't really follow that. And then Apple on Thursday. Leery about Apple revenue, but we'll have to wait and see. I think this quarter might actually be positive for Apple only because of a lot of pre-tariff buying, but I think that'll subside quickly in this quarter. We've got Amazon coming out. We've got CNR, the Canadian National Railroad, and then Aritzia as well as Reddit. Reddit seems to be on a bit of a tear again. And then finally on Friday, Exxon, Chevron, two big oil companies. Can't imagine the results there are going to be positive. I'd be looking to maybe short or put a put on those. And then Apollo Management. So I do believe Apollo Global Management is going to come out with some pretty phenomenal earnings, but we'll have to wait and see. They do a lot in private credit. It's pretty steady, and they should be making money, but they've gotten hit with the rest of the financials, but they have begun to recover. And that's where we are today on the 25th. Good luck with your trades. Have a great weekend. If you like the video,